What's going on, everybody? Welcome back to the channel. Today, let me bring my microphone over here because it is way the fuck over there. So yeah, welcome back. It's been a while. I have been doing my own thing. I was working for a while and now I'm laid off again, so I'm back to trading. Yeah, and I have had an interesting couple weeks. So I've been trading for a couple weeks. Haven't made any videos because I've just been focusing on that and a few other things in my life. But now I think I'm going to start making videos again, start giving you guys some updates on the things that I'm working on. And to be honest with you, I wasn't sure if I even wanted to start trading again. You know, it's a rough thing, trading, but it can be rewarding if you're willing to be smart about the way you trade. And that's one of the things that I want to stress in this video, guys, is that I don't make videos to like give you guys recommendations or say buy this, buy that. Like, I'm not anybody that comes to this channel knows that like I'm a beginner, just like most people. I was a beginner, and I'm like maybe not a beginner now, but like I'm not a pro by any means. And like I would prefer people to have their own ideas, have their own setups, have their own kind of concepts, and get those ideas maybe from me and learn from me. And that's what this whole channel is about. It's about learning, right? So that's just what I want to stress when I make these videos. And it's good for me as it is for you guys. And I kind of had a rough couple weeks trading, but this week has been amazing. And that's what I want to go over, is kind of the reason why it's been such a good week, and the shift that I've made, and the reasons why I think that this new strategy is the way to go. It's literally been 100% this week. My trades in this strategy. I've lost on a bunch of trades this week, but those were not part of this strategy, which is like trading options basically. So I've started to trade options specifically on the SPY. So basically just looking at the daily chart of the SPY, or the spider, which is the proxy for the S&P 500. So that is the vehicle in which I am trading, and it has made the ability, because the problem is, and this is the thing, a lot of you guys, you know, like I was trading this other stock today, RNA, right? And I just want to make sure everything's good on the charts. Yeah, everything's good. So RNA was a stock that I have gotten chopped out on pretty much all week. Let's be clear about this. Now I made money on it, right? I've made money on it numerous days. So the first day when it started breaking out was way back here. I think this was Wednesday or Thursday. But anyway, so the 14th, whatever day that was, probably Wednesday. So this thing started breaking out. You know, it had some news. It's like some sort of health bio stock or something. You know, it's got like RNA, like mRNA, right? Like they make vaccines or whatever they do, like something like that, something related to like healthcare. I don't really know what they are, but I know they had some positive news or something that came out that sent them shooting up from $10 or $11 to $15, and it started a base around 15, and then you had this rocket ride up. So when I saw that, you know, it was kind of funny because, and this is, I'm telling you guys this so you guys understand the differences that I've made and the reasons why you should think about making these changes if you're looking to be a consistent trader and to trade things that are a lot more predictable. Because like I know setups. The problem is when you're trading stocks like RNA, like this stock here, the setups are there, but they're harder to get. And then I'm going to explain to you exactly with this trade and why this should have been a monster trade for me, but it wasn't, because of the fact that I was waiting for the exact proper setup, and I waited too long. So what happened was I saw this thing rip up. Right, it broke above 15. So I was looking at it like, oh, okay, if it can hold here, like I was really liking it for a pullback into the 1540s. So I literally had an order sitting right here, right? I had an order sitting right here at 1540. 1540. And I was in this trading room and everybody was like, you know, I'm going to try and catch a bounce on this down to $15, which is why I bought it at 1540, because you know, which is why I had my order at 1540, because everybody thought that it was going to come all the way down to the VWAP, right? It was going to come down and test these lows, or the VWAP at least, maybe give you a 15, a 1520, something like that. But the lowest it was able to give you was a 1540. And I should have bought it because it came right down into the SMA, right? Into the 20 period SMA. But instead, I was thinking more like, oh, I'm going to put my order out, hopefully get filled. So anyway, I got missed there. So I got missed there, and it went all the way to $20. So basically, from 15.50, I would have had a fill right there, and I would have been all the way to 20. But because my setup, because the price I wanted didn't get filled, and this is why trading these volatile stocks is so difficult. It's such, even if you're perfect, even if you have the perfect setup, even if you understand your setups, you have to have the perfect trade to make these stocks work. So it's not that easy. Now, I'm not saying you shouldn't trade them. I'm just saying you should lower your risk, and when you're trading them, you should be aware of the ability to go both ways and the ability to say, hey, this stock is going to give us big moves in both directions, to the upside and to the downside. So in this sense, what I would like to see here is that big move to the top side, and then if you get pullbacks, you want to buy those pullbacks as long as it looks strong. So when you look at the volume profile of this, you see the green volume is always in charge. So even when you have these pullbacks, they're always on lower volume than the green volume, right? So like none of these pullbacks until you start getting way over here, right? And then you start to see that, and they weren't as much, but what you'll realize is that some of these candles, like this one here, was a candle with a lot of selling in it. So yeah, it might look green, but this candle, if you looked at the 10-second, these were probably higher red candles than they were green candles. And the same goes for this candle. So this is when the volume profile started to die off, and that's when you saw the change, and that's when you saw selling come in. And that's why I went short, right? So what happened with this stock is that it broke all the way up to 20. And then I was like, okay, I'm not going to buy it in here. This is just too crazy. It's going up too quick. I didn't get my opportunity. You probably could have bought it off 18 if you were really quick and you were really willing to take the risk and use that downside risk, maybe 1750 or whatever your stop would have been, right? Or maybe just the break of the SMA. But I was, I don't like that. It's too quick. So I was waiting for my opportunity. It gave me my pullback from 20 and it came back to 19. So I basically got filled right at $19. So it came back all the way to 19 and it basically sat there and it did nothing. So I filled right at 19 and, it was kind of one of those ones where I stopped out because, I stopped out for half my shares because I thought it was going to fade. Because the volume started to pick up red. It started to look like it was going to break the middle of this channel, right? So the middle channel of the Keltner channel is a very good indication that the stock is strong if it stays above this channel. As you can see, it did stay above it, but if it breaks below, which it will do right here, and along with the SMA, that's when you know it's weak. So my plan here, was I'm going to cover half because it looks like it's going to fall. So I want to at least take, a little bit of profit, 20 cents, 15 cents, whatever it is. And that way my downside risk is mitigated. So this is the way I've been trading some of these, and it works both ways. It kind of screws me, to be honest with you. I should just hold the whole position. But anyway, so I was able to, hold, because I sold half, I still had half my position. So I was able to catch this then rip. Once it held that line, it didn't rip. It looked like it was going to reverse and fly through that line. So I covered, but it ended up shooting up to basically giving us a 2050, 2062 was my top of 25%. So I got out 25% at 2040 and the other 25% at 2062. So that was my trade in RNA. Wasn't a bad trade, but the funny thing is that this was a bad trade. And it wasn't a bad trade because, I basically, it was break even, right? This was a break even trade. But the reality is that I was trying to short it at the 19, the breakdown of 19, right? So I thought, okay, once 19 breaks down, since that was support before, it's going to be resistance here. And it was. It's just, it gave you this little rip up to 1950 before it wanted to collapse. So unfortunately, it stopped me out there. I probably should have just got right back in here and it would have been a fucking glorious short, right? So anyway, I ended up getting back in later on in the day. Once it kind of looked like it was basing around 1750, I started getting in around 1750, and I was able to get a nice short down to 1670, the 1670s, right? It wasn't amazing. Honestly, it should have been a better trade. I should have covered most of it on this initial rip down to 1650. I thought it was going to keep giving up, but it ended up reversing and kind of got out of that for a small win. Anyway, so the reason I go over this is because these stocks are the ones that are whippy. These are hard to trade. They don't give you, even if you have the perfect setups, you have to understand what you're doing, right? You have to be able to do the right direction. So this is the problem. I thought maybe this was going to break down. So I was going short at the VWAP, which was dumb. And then I covered once it broke over. and I should have just gone long, right? When this came back down to 17, I should have just gone long, and I knew it. But so this is something I've been noticing a lot of times, is that like if you're trying to short a level of resistance and then it breaks above that and comes back down to that level of support, you should try and buy it and go long. I just don't like reversing all the time, because it's like, if I already got fucking fooled once on a stock, I don't want to get fooled twice on a stock, right? Fool me once, shame on you. Fool me twice, and I'm a fucking idiot, So like that's the kind of problem with me trying to like go short and then long and then short. You know what I mean? Like, once I get stopped out, I kind of just like to step away and say, all right, you were wrong. Let's just digest and try and find another trade. Now, like I said, with this kind of trade, when there's so much momentum behind a stock like RNA, it probably is good just to go long, right? Just to say, okay, it stopped me out at like 1770 or whatever. When it comes back down to the 1750 level, I'm gonna get back in, right? And I'm gonna hold long. And you would have had a $3 winner, right? So it just shows you that like the levels when I'm stopping out of my short is the exact level when I should be looking to go long, or at least waiting for a pullback to go long, right? And so today there was the same thing happened, right? So today I lost on this, not much, like it was a few dollars, like it's very small loss, because I knew my risk, right? And my risk was basically the 1930s. So I got in at 1944, hoping that the 1940s would hold, and then we'd have a move to the upside, right? In which we would then somebody's talking here on one of the channels. Check these guys out too if you ever get a chance. Trader TV Live, I really like them. They're in Canada. They're out of Toronto. Trader TV Live, Neil and Sean. It's a great learning place to learn. Great opportunities, good knowledge, good place to learn. So back to this though, RNA is I had this level at the 1940s as my support. I was hoping it would hold, and even if the 1930s would hold, we'd have this, because that was kind of this SMA, right? Or was it the SMA or was it the channel? I think no, it was the SMA. So this purple line is the SMA, which I was hoping it would hold and then shoot up and give us a test of 20 again. Hopefully maybe a rip to 2050 like it did the other day, and then it would probably come off. But unfortunately, it basically just ripped down. So I got out at 20s in the 24s. So I lost 20 cents, knowing my risk was the 30s. So that's why as soon as it broke the 30s, I was out 24. But like I said with the other one, this is exactly where I should have looked to go short, because I had tried to go long, it failed. I should have looked to go short once it broke below the SMA and the middle channel of the Keltner channel here. So this 1950 or this 1930, right? Just because I said 1930 was going to be support, if it held, it didn't. So then it acted as resistance. So that would have been a perfect short. You would have had an easy dollar, something winner. $2. Well, yeah, no, dollar something. Yeah, $1.30 winner, right? And so, or maybe not even it. You would have had more than that, because it would have hit. Yeah, so you would have had like $1.50 winner. Beautiful, right? Basically up 10% right off of that short in the 1930s. Didn't do it. And that's kind of like this. See, this is the reason why I've kind of stepped back from these high-moving, these fast-moving stocks. Like, what I find is that a lot of times they want to, like, make you chase, right? Like, they get you so excited. It's all about that FOMO. So when you're watching these high flyers, these stocks like COSM today, right? Like, a lot of people were chasing this stock this morning, this COSM, right? Like, man, were people chasing this morning, because it had a reverse split, shot up to, and it's been going crazy like the last couple of weeks. It was a penny stock, 20 cents, 30 cents, going up to like $1. But now, after the reverse split, so basically it was at like maybe 60 cents or something. It reverse split 12-1 to 6.39. So maybe it was at like 50 cents or something. But what happens is that you trade, say, like 1,000 shares for 100 shares, right? So your 1,000 shares turns into 100 shares, but the price of the stock is able to go up. And they do this if they want to like maintain their listing, because a lot of times in order to be on the NASDAQ, you need to be above $1. So stocks that are below $1 are told, hey, you need to get it back above $1 or you're going to be kicked off the NASDAQ, right? So this is something that companies do to maintain their status on the exchange. And with COSM, you basically had this flush, right, down to 20 cents after the reverse split happened. So everybody got out. And then what happened was is that because so many people had this on their radar and people were like, whoa, what just happened? How did this stock just go down like 50%? But then they all started loading up. This morning at like 7 o'clock this morning, you saw people starting to get into this thing at like 70 cents, at like 20 cents, right? 50 cents, 60 cents. And then next thing you know, the stock goes to $3, goes to 350, 370, 4 opens, goes to 450. You bought this at 60 cents, or like 50 cents, and you're up almost 1,000%, right? That's insane. Turn 100 into 1,000, right? $100 into $1,000. That's the kind of opportunity that a stock like this gives you. The problem though is, and you can see like when it opened, is that you had 2 halts. You had a halt up, and then you had an open off that halt and an immediate halt down. So if somebody's chasing this, they're like, oh my God, this is going to go to like $100. They buy it at $4.40, and it immediately flushes down, gets halted at $4, gets flushed down again, opens at $3.50, flushed down again almost to $3, below $3, sat there for about 5 minutes until it started to rally again. But if you bought this here and you sold it down here, a dollar loss, that's 25% loss you just took because you were trying to chase this thing, right? Yeah, if you bought it down here in the pre-market, yeah, you're laughing. But this is the thing, right? The early bird gets the worm. If you're not willing to trade early in the morning, jump on those 7:30, 8:30, or maybe your broker doesn't allow you to, right? If you're not willing to do that, you can't chase these stocks. You need to have a different game plan, right? You need to come with a different game plan, and you need to have a better risk ratio, or better to determine risk by not trading such crazy volatile stocks, but by looking at things like the SPY, looking at options. They are a little bit scary, and I know they're confusing, which is why I was so hesitant to get into them. But honestly, so this week I've traded options every day pretty much, and I'm green every day, and like 10-20% green every day. Like today was a huge win, right? And it all comes down to the same technical analysis, playing the same charts, the same patterns, but the difference comes to the risk you're taking on certain stocks, because the SPY is going to move in the direction it looks like it's going to move, 7 out of 10 times. And what I mean by that is that, like, let's look at the last couple days, right? So, and this is one of the biggest things, is to know that like off the open, sometimes you don't want to take, the open is when you don't necessarily want to take the big positions, right? So off of the open is when you want to be hesitant, but you want to look for directional confirmation. You know what I mean? So yesterday I was shorting I was buying puts on the SPY in the 393s, in the 394s, because this came down, acted as resistance, and then it failed. So I was buying puts to short the SPY once I saw this kind of weakness, right? And once it broke these lows that it was trying to hold, you could tell that it was going to make new lows and it was going to move in that direction. And it did pretty much the entire day, right? Same thing today, right? You could see the SPY, and this is why I say, though, you got to be careful of the first 15, 20 minutes, half an hour, because sometimes you'll have this fake out operation. And I was actually looking, so originally once I saw the strength, so it looked weak this morning in the pre-market, but there was a little bit of strength. You could tell that like it was trying to come back because it had fallen so much overnight, and there's so much negativity that usually you get those bounces because people are all expecting it to go down. That's when it goes up. So everybody at the open was like, oh, this thing's gonna flush. So all those shorts get stopped out because the algos start pumping it to the upside. They know that everybody's gonna go short, so we'll just make it look like it's gonna go long to stop out all those shorts. And then as soon as all those shorts are stopped out and people are thinking, oh, right, this is looking long, they start to get in long. That's when it flushes, right? So it's kind of funny because they almost had me. But this is how you determine a trade and whether you should enter it, right? So the volume profile on this green move was beautiful, but the highest volume candle is on this doji candle that was really a reversal candle. It was not going much higher than this 386.50, right, that it had hit. It was not going much higher than that, and there was so much resistance that it flushed it right back down. So that's when you immediately were like, okay, if it breaks above this and can hold this support, then it could go long, but it's going to really need to have volume. So it needs to have volume above this 386.50, right? So that's when you see when it did break 386.50, where's the volume? It's red, red, red. Oh, the green volume comes in. Oh, it's nothing. It's literally half of the red volume. So then red, red, green, and it's still half of what the red volume was. So immediately I'm like, okay, this is not looking good. The green is not coming in. The longs are not able to hold. So what you would wanted to see, you had this doji candle this morning, which was a reversal to the red, but then you had two really solid green candles that were the highest volume at that time. But then after that, all the volume was red. And that's where you can clearly see the bears in control. And just because it looked like it was going to go green, you didn't want to buy calls. I was thinking of I was like, okay, I'm going to buy calls at 386, because if it breaks above this level of resistance and it holds, like I said, 386.50, if it holds with support and green, lots of green volume, then you can go long. Then you can buy calls thinking, okay, I'm going to buy the 386 calls and I'm going to make money. The problem is that it didn't have the volume to follow through. So then instead of ripping up, it broke these lows. And that's where I was looking to take a trade, right? So I was looking to take a trade once I wanted to get in here, but it was just going down so much that I was like, you know what? And then this kind of gave you a false break, looking like it was going to go long again, until it gave you this confirmation that we were going to have a big sell-off, right? So this confirmation here, which was at 383, you can see this level in the pre-market. It went down and had support. And you can look back all the way. You can see support at this level pre-market, right? A little bit of resistance, but mainly support. And that's why I was like, okay, this level is interesting and it needs to hold. If it doesn't hold and it comes down below this level, guess what? It's a short. So in this level here, when it came up to the SMA and it looked like it could test it, but it didn't, I was buying puts. So, and I'll show you down here. So if you look down here on the put contracts, right, you can see where I'm going long. So this was 1022. So you can look over here and you can see 1022. What do you see, right? So this is right when it was trying to break out above, but then you see the red volume taking over. And it takes over to the downside, pushing it lower below those moving averages, and those act as resistance. See, this is where like the false breakout sometimes gives you a little bit of hesitation, right? But you can see when I got in, it was when the volume started to turn red, and it was clear that it was not going to be able to hold above those levels. But if it was able to break above this purple line here, right, this SMA, and hold above it, so right then, and that was at 383.50, that line that I had just shown you before, right, then I was out, right? If it goes above 383.50 and it holds with volume, then I'm out. And it kind of did that over here, but this is the great thing about trading puts, and this is the problem when I was trading these volatile stocks, is that sometimes you have to hold them. You're trying to hold them for these big moves that you don't necessarily want to take profit, either because you don't have a ton of shares or because it's not as big of a move and you're like, man, or maybe you've already lost in the day and you're trying to make up your losses. Whatever the reason is, you have this want to hold for bigger moves when you have these volatile stocks. With the SPY, when you're trading options, you're either going to win right away or you're going to take a hit. And when you win, you're going to win big. But when you lose, you're going to take a little bit of a hit, which is why you need to be out quick, right? So when you look at this trade, you're going to see that you're going to think, "Oh man, you got in right at the perfect level." Like you got in basically, like I got in at 247, right? So the contracts were starting to look up. Sorry, I'm just getting a text and I just want to make sure it's not. I'm pretty sure I know what it is. But the reality is that when I bought this, it was just understanding that resistance line was at 383.50, and it was testing it. It broke out a little bit, but then as soon as it rejected, as soon as that 383.50 didn't hold, I was in, right? So it came back down, and right at 22 here, you can see it's rejecting, and that's when I got in. Confirmation. The confirmation was that the red volume was coming in. Yeah, it looks like it's dying here, but what you can see is that it's because people thought it was going to break above this SMA. So it was a risky trade, which is why it was such a winner. Oh man, it's breaking out now again. So the SPY is going much lower now, right? And this is, again, it tried to break above this SMA and it rejected. which is why you're having such a move to the downside, which is why there's so much, potential in this move, is because my idea was it was going to break the low of the day, right? Because it had made a low, came up, tried to test that low, looked like we were getting volume, but then a second it got snapped down, you saw the red volume coming back in, and you saw the right trade. Now, this was a very risky trade, and it was a trade made because I had missed this trade, and I really wanted to take a trade on the SPY because there was so much red volume coming in, and I knew that as long as the green volume didn't start to become, more, just like it did here, like this is, I was already out of the trade at this time, right? But if it would have held this green volume and I was still in it, I would have been out. I would have been selling here, and I would be like, oh no, I'm done. I'm not, because it looks like it's going to reverse. Even though you see now it's trying to break the low again, right? So the good thing is about the SPY options is that you can mitigate your risk by joining the trend. So this was a downward trend. It's obviously a downward trend. It catches the bounce into these support or these moving averages, and that's when I look to go short. Right? Is you get the downward move, you get confirmation and a ton of red volume that we're going down, gets a bounce on light green volume right into the moving averages, and that same resistance level that I had drawn out previously, that 380, 350, and bam, right? We take that trade and bam, we get a huge winner. So I like with this here, it's kind of one of those where like you're in a very risky situation that it costs a lot to take these trades. So you got to be willing to take your profits, but you also don't want to be taking big losses. So you need to be able to be proactive. Now, this was a dumb cover, I'm not going to lie, but I was basically up 10%, and I'm like, you know what? I got 2 contracts. I'm going to get out of one in case this thing reverses. And this is just that kind of right here when it starts to test, you say, oh, if this breaks above, and the problem is if it breaks above, it'll happen very quick. So this could easily have reversed and gone down to the VWAP $2 so quick, and I'm down 47 cents on 2 contracts, right? So that's like basically like bam, $80, $90 loss like that, like nothing, right? And so you have to be proactive in knowing that, okay, I'm going to take one off at this 10% win, even though it's not exactly what I want, right? And then I'm going to hold this other one to see if we can push through and I can get follow through. And it's kind of hard to see where I covered because of where this thing is here, because it's covering the high of the day is basically right where I covered. Now let's go over here and you'll see it. So the high of the day is exactly where I covered basically, and so you can't, it's funny you can't see it, but right here, right, you can see the cover -1 at 331, right? So I bought the original 2 contracts, 247, out first one at 284, out the second one at 331 for almost 50% gain on one of the contracts. One 10%, 50% for, basically a 50% gain. And this is why, and see, this is exactly why you need to be careful though. Because look at that. The second it looks like it's going to make a new low, it literally goes down to test it. You're like, oh, you buy put contracts here thinking it's going to break the low, and bam, you get slashed down to 290 in 2 candles in seconds. 290 from 340, 350, right? That's how volatile these things are, and that's why you need to be careful. You need to be able to look and say, hey, and this gave you, the thing here, and this is why I say, like, you want to be risky at this. When you saw this volume, this red volume ascending, and it looked like it was going to break down, remember, a lot of times they're going to do the exact opposite of what they should do, right? So they're going to do the exact opposite of what they should do, right? Wow. Look at that. Oh, man, if you would have been in that, that's just savage, right? This is why options are scary. You need to be able to mitigate your risk. So I'm fully out now. I've taken all my profits. I was only looking for a quick move, right? I was looking for a break of the low. I was looking for another move lower, and then I'm covering, right? Then I am out. Second that green volume starts to look anywhat threatening, I am gone. This is why options are so scary. And this is why so many people will never trade them. But understand that these moves only happen very small times. Today is a very big day for like quad witching. There's so many things happening. All these options expire today. A lot of them do, right? So a lot of these people are looking to get out of their positions or to make sure they're not holding through these big moves, right? So I'm just gonna make a quick move, but like, just remember, send a text, let these people know address real quick because they're coming to get me. We're gonna go hang out for a little bit, but just remember, guys, that when you see volume, you follow trend and volume. Trend and volume are the two biggest things. You see trend, you see volume. Trend, volume. So this is when it reversed, right? Before here it was green. The volume is red now. It's clearly red. So you get these moves down, but then you get immediate red volume that's equal, right? And this is when you can see, right? Like, you don't get green volume like this, right? Like you get huge red volume and then you get, oh, this tiny piddly green. This is how you know the movement. And you can say, oh, this was a big green candle, but look at it. Look at the candle. It was mostly selling. There was a lot of selling in that candle, right? So like you get these candles that were mostly buying, but that's after everybody's already sold, right? But now you get these big reversal candles here, and this is where you see trend change. And this is where you see people defending that low, trying to push it back up because everybody thought it was going to break, and then they do the exact opposite, which is why you kind of want to be trading. And this is one of the things too, as I've noticed, is that when I'm taking a lot of these SPY trades this week, it's been after 10 o'clock. It's been, basically in this 10:20, 10:30 area. Before 11, but, that 10 o'clock, I find you almost always have a direction, and then you have a movement in that direction. So you see back around here, 10:30, you're getting this consistent, and then bam, and then it falls off, right? And so you're getting these consolidations in 10, just like in here, you'll see more consolidation around 10, and then a breakout, right? So around 10, you get this consolidation, then you get a breakout. Now, obviously, I'm not saying that like this is a huge, like 100% every time, but you're going to notice that after you get this morning kind of back and forth action where there's so much volatility, it's going to whip and saw. It could go up 10 points, could go down 10 points. It doesn't mean anything about direction for the day. It can mean something. Just like here, pre-market, you saw this huge spike up, went up like $14, $15 off the CPI dot. Everybody's like, oh my God, we're going to go to the moon. It's going to go to 420. It's going to go to 450. Everybody buy calls. Everybody buy calls. And then it just collapses, right? And I was buying puts this day. I was buying puts in this area knowing, hey, this is way too much selling volume for anybody to want to buy it. So let's short it and let's follow the trend. So every single one of these trades has been the exact same thing. Follow trend. Get in at areas where the volume is still in the directional trend of way it's going, and it's a clear trend, right? Like you see the volume consistently going, following with the downward movement, and the green volume is just not able to get above the red volume, right? And this is why I would say, like, when you're looking to take options trades, you want to have a quick move. You don't want to be holding them for like 2 hours, right? Unless you're looking at key levels, it breaks down and holds below, and then you're like, okay, I'm holding this for the next week because I know it's going to go down. But one of the things that I've been doing with these options contracts, and you'll notice it very quickly, is that I am buying the options that are expiring today. So I have no ability to hold these options for the next couple weeks because I am buying, they expire today. If you were to hold these till the end of the day, you would end up with stock. You would end up with the SPY. So anyway, that's just something to be aware of, that you want to be able to get into these and get out of them very quickly with big moves, or at least a few moves, because even when the SPY only moves like $1 or $2 dollars to the up or downside, that's a huge move in the options. That's 30, 40, 50% in the option chain. So you don't need huge moves in the SPY. You just need a clear direction, which is why it's so important to make sure you understand the direction before you're taking these trades. I'm not trying to say you should become an option trader. I'm not trying to say this is the best way to make money. All I'm trying to say is that this is the way I've been able to make money consistently over the past week, and I'm going to keep this strategy going forward because it seems to be a very good strategy. And it's one of those ones that I think people are just afraid to buy options, so they've never really wanted to trade them because it's just scary. And trust me, I thought the same way. And it's funny because every option trade I've ever made, even back in the day, has been green. So that's just something to think about. Anyway, thanks for watching, guys. Feel free to like and subscribe. Come back for another video. Sorry for this one being so long again, but I just wanted to kind of give you guys an idea of why I've been doing what I've been doing and where my head's been at. And I also got this other company that's looking to partner with me, some like InstaForex, something like that. Who knows? Honestly, guys, I don't trade with them. I don't use them, but maybe if you guys wanted, or if somebody wanted them, maybe they are a good platform. I don't really know much about them. Don't think that I do, but if they're willing to pay me, then fuck it, man. I don't mind. But like I said, I'm not going to be promoting them or anything. It's just going to be like, look, if you want to trade Forex, there's some Forex stuff down there. I don't know much about Forex, so, but, Anyway, and crypto, I'll give you guys some crypto updates pretty soon, but today's not looking good. And if the market doesn't hold up, then I would say, guys, just hodl for a while, but at the same time, don't be too optimistic that things are going to get better quick. All right? Have a good day, guys.